CNBC-TV18.
Welcome back. You're watching Big Deal and we are discussing the return of startup IPOs and whether there is market appetite and what is it that the startups also need to learn from the past experience. Amrit, being a founder yourself, from the last experience and the wave of IPOs that we saw, there are many learnings. What are your top picks in terms of the lessons for your own self?
Yeah, I can think of three things. To begin with, start the process early. This is not something that we can wish today and execute in a month or a year. Sometimes the building blocks take time. Second thing is, I think and this is something again linked to the first one, where the way IPO process works, there's a roadshow, and in the roadshow is when you start communicating with investors, telling the story of the business, etc. But often that is also not enough time. Sometimes it's good to spend many cycles with investors, maybe like a year or two before you're ready to go public. Start educating more and more people about what the company is and what the business is likely to be, so that they can also track you over a period of time and see how you've performed versus when you spoke to you 1 year ago to today. Because the IPO roadshow is a very short, compressed time period. It's a little bit like arranged marriage in a very short span of time.
Yes.
Where you want to spend more time on both sides.
All right.
Those are the few things, yeah.
All right. So the journey begins after the listing. A lot of, startups have really realized that. But Gautam, it is very critical to have the, capital market, the stock market as an exit option. I know at least 7-8 years back, the entire VC community was clamoring for this opportunity to be there. But when we got it, there were some missteps that did take place. Now, how are you preparing your portfolio companies for your own sake for getting the right hefty returns from the IPOs?
Yeah, sure. So, we take this part very seriously. We actually spend a decent amount of our time with our portfolio companies, and we have a playbook. And some of this is something that, is not very apparent. So one of them is the discipline around MIS reporting versus end financial year reporting.
Yes.
Effectively, where in the MIS, people are using revenue, GMV, definition of GMV versus net sales, definition of ARR in SaaS companies versus live ARR, EBITDA versus adjusted EBITDA, and EBITDA in some cases instead of return on capital employed. So this is the discipline that we need to put together.
Right.
Number two is, related party transactions. So we need to educate our founders that there are issues around related party transactions. They need to be transparent about that.
Yes.
Number three is effectively consistency and sustainability of unit economics and metrics. 6 to 8 quarters prior and 6 to 8 quarters post the IPO.
Right.
That's very important. So these are the 3 or 4 things that we do. And the most important is promoter ownership structures, whether in Indian holdcos or foreign subsidiaries, and whether that is compliant with the RBI and FEMA.
Right. So basically complying with most of the norms and be ready for the public market. That's what you are advocating to the portfolio companies. But Gaurav, how is the pipeline of aspirants looking? And why I call it the pipeline of aspirants, because a lot of companies, a lot of names which were there a few weeks back are non-existent because they do see that the valuations do not match up. So how are you seeing the pipeline and the preparedness, and how many could really fructify?
On the pipeline, as you mentioned, of course, there was a larger pipeline end of last year and maybe start of this year. Some of them have decided to postpone, but still there are, I would say, at least a handful of you who are still going ahead and have filed, and hopefully in a decent and stable market. As Amrit mentioned, that IPO needs a stable market and predictability. Some of them could go through, but on a more, sort of a long-term basis, there is a healthy pipeline of companies that will tap public markets. We expect that in the next 5 years, at least 20-25 companies will come from the tech space, if not more. And those will be across sectors. It will be consumer tech, fintech, on logistics, across tech sectors you will see, because these are businesses which are here to stay. And we take a lot of confidence from secondary market and private capital markets. So we have actually both the lenses here in Avendus. On the secondary market side, about $3 billion worth of secondary market blocks have on the tech side have traded, which have got a strong response from institutional investors. And secondary markets are precursors to primary markets. So if there is such strong appetite for the same 5 companies in the secondary market, we think there are more believers when new companies come for IPOs.
Yes.
And even on the private side, we are seeing very strong action in some of the large companies. Recently, we did a large fundraise where a sovereign wealth fund invested in a large consumer tech company for about $500 million. So clearly, there is appetite, there is capital available, but obviously the bar is high. Only the quality companies will get the top dollar valuation and top quality.
Right. Its quality is one thing, but Gaurav, what I have also identified is that now that the valuations have dropped at these levels, there are still buyers. But Gautam, I want to pick your brain on one important aspect regarding this, and it is that there is still money chasing some of the digital companies, and some of the sectors are doing much better than the others when it comes to public market approach. Which are those spaces which will still have a calling?
Yes, thank you for asking that question, Nisha. We are particularly excited about the SaaS companies that are being built out of India. My dear friend Rajan Anandan and us, I believe that in the next decade, between 10 to 15 years, we're going to have about 50 to 100 of these SaaS companies go public on the Indian exchanges.
Right.
The Indian SaaS companies, are more capital efficient if you compare them to the US companies from a capital raise to a revenue perspective.
Right.
Number 2, they are inherently got higher margins, 50 to 80% gross margins. Number 3 is their addressable markets, their GTM, go-to-market is India, Middle East, Southeast Asia. And you can actually build 50 to 75 million ARR companies.
Yes.
And hopefully a bunch of those will go public in the next 10 to 15 years, which we're quite looking forward to.
All right. So Amrit, Zetwerk falls into that category or not, Gautam?
So I'm very biased. I've been blessed by having a 6-year association with Off Business.
In the similar space.
One of the co-founders of Off Business helped start Zetwerk. So I'm of course biased towards Off Business, but I think Zetwerk has got a good shot as well.
All right. So Amrit, there's a backing for you. So tell us, what is the timeline for your IPO?
No, we are still some time away. We are still a 5-year-old business. I think sometimes, even for me, it takes me a moment to recognize that this is actually, we started our company in April 2018. So this month we'll be celebrating our 5-year anniversary.
Right.
So we have come a long way. We still have a long way to go.
All right.
Exploring international markets, we're exploring new categories. So
All right, all the best for that, Amrit. And thank you so much, all of you, Gautam, Gaurav, as well as Amrit, for joining us on this riveting conversation. So startup IPOs, whether they can make a comeback and which ones will do well and which ones won't, and what is the market appetite like. This is what we discussed, and this is evolving as the market evolves and macros evolve. So we'll keep an eye on that as well. But that's a wrap on this edition of Big Deal. Thanks so much for tuning in.